Hi, Matthew.
Hey Jack, what would you like to work on tonight?
I would like to work on some microeconomic stuff.
Okay.
Uh, uh, I think that I sent it to you. I made like a copy of it. I think that I added you on there. If I didn't, I'll make another copy and add you.
I don't see anything from you since yesterday, or actually 2 days ago on it.
Okay, I'm gonna share a copy of it right now.
Give you, I'll put in the chat here the email in case you need it.
For students. There we go. Should be sent right about now. Here we go.
Okay, I see something has come in here. I can open that. All right. All right.
I want to work on microeconomics tonight.
Okay, so there's two countries, both produce widgets and gadgets. All right. All right, so
If you're sharing your screen right now, I can't see.
I'm looking at the document first. I'm just kind of getting
Okay.
set up here, and then I'll jump in here with some comments here. Okay, so let me. You've got access to this document.
Mm-hmm.
So I'll snip this in. I'll share my screen, and we'll get started. All right. So the one of the first things you do here is you could make a graph for each of these. A country's maroon. So maroon. Sorry, maroon. And maroon. This is maroon. Their widgets and gadgets is 20, 20, and 40. Okay, so that's 20 and that's 40. And then gold. Gold is, and this is widgets and gadgets. They make 4 widgets for 20, so they're right here. Okay. So now the questions we just answer the questions, and it's probably easier for me to do those in the document. Which country has the absolute advantage in producing widgets? So it's just whoever has more widgets. So if it's okay with you, I'm going to type some things in here because it's easier. Explain maroon. Oh, so they tell you that maroon makes 20 versus 4. That's why 20 is greater than 4. Are you seeing that? Do you have the document up as well? Maybe you're muted.
Oh yeah, I was muted. My bad.
No problem.
Yeah, I have access to the document.
Yeah,
And for A and B, is it maroon?
it is.
Okay.
I'm putting here in blue why that is, so that you can see that 40 is greater than 20, and that's all the explanation you need. They just make more.
Okay.
Okay.
And for C, for opportunity cost, do you just divide 40 by 20 and get like 2
Yeah.
for opportunity cost?
So this one is 1/2 because it's 20 divided by 40, and this is 2. This one is
Mm-hmm.
1/5, and this is 5. And you need those numbers. So what is the opportunity cost of producing widgets? It, so I'm not. There's many ways to answer this, but it's like one widget costs 2 gadgets. Is that okay? Maybe you're muted again. Okay. Opportunity costs of producing gadgets in gold. So one,
Wait, so for opportunity cost for maroon, I got 2. Is that correct?
yeah.
Okay, good.
So one gadget is one fifth widget.
Oh. So I'll put 1/5 for opportunity cost for D.
Yeah.
Alrighty. And for E, with specialization in trade, which country will produce widgets? Explain.
So the answer here is you're just looking at the numbers, these kind of numbers. I mean, there's rules and all this, but like just the gold.
It just says
Really
making.
gold is a lot better at making gadgets than widgets, so they're going to make gadgets for sure. And then maroon, relatively, it's only double versus 5, so they're going to make widgets. So maroon will make widgets because their opportunity cost. Their opportunity cost is lower.
Opportunity cost is lower. Hold on. Is lower. There we go. If the two countries trade, what would be the terms of trade between maroon and gold?
Yeah, this is where I'm always a little unsure here. I actually don't quite know what it is. I think you got to get, like, if you were to take this gold and multiply it by 5 to get 20, and multiply that, you get 100. Um, there's some window which I don't know where this would be okay. Yeah, this is very. I would have to look this up. So how much time do you want me to spend on that?
Uh, you can spend enough time on it. I mean, we have
Okay.
an hour.
Determine the. Let's see here. The trade.
I asked a friend how he did it, and he said that you would trade a widget for in between 2 and 5 gadgets, and then trade a gadget for 1/2 and 1/5 rate widgets.
Okay. Yeah, that sounds reasonable. I would go with that.
All right, on the number 2, I guess. This one's going to be interesting.
All right. 2A. Draw a correctly labeled graph of the gasoline market for. Demand is relatively inelastic and supply is relatively elastic.
Competitive market. So I know what that means. It'll be like it's what's going to be going up to. Uh, I haven't looked at these in so long. Let me check. I know what it looks like though.
I have to seek some outside help here because one of these is probably an upward and downward sloping curve. I'm gonna get the right one.
Oh wait, I think I know what you're supposed to do. Like S is going up, and then D goes slopes down, and then it meets in the
Yeah,
middle and
yeah.
equilibrium.
This one's actually already covered in another. Someone's already covered this online. So the yeah. So the graph they give. Let me just snip it in. That'll be easier. So this is for 2A. This is for 2A, this graph here.
Mm-hmm.
And
So that's what the graph will look like.
and then we can talk
Suppose
about
that the
what happened.
government imposes a $2 per unit tax on the producers of gasoline. On your graph in part A, show each of the following after the tax is imposed. The price paid by buyers labeled PB, and then
So what
the
happens
after
is,
tax.
yeah, the tax goes up. The new line here, I'll draw this new line here. S
Oh, okay.
plus tax, which is $2. Okay. And then
Mhm.
you've got some stuff here. So like this is the PB, and this is
Mhm.
the new quantity. So I don't know if it asks for that. Does it ask for the new? Yeah, QT.
After tax price received by sellers. This is a $2 tax. Does it like
So
want me to?
the seller receives this price down here. So
Oh,
this tax wedge, which is what your instructor is trying to get at, is there. Is that okay? I mean that's the three things that you need.
oh, okay.
I
I
mean
understand now.
A B C or A B C.
Using the labeling on your graph, explain how to calculate the total tax revenue collected by the government.
So that's this rectangle here. So um, it's the height of the rectangle, which is this is part D. It's PB minus PS
Oh, okay.
times QT.
That makes more sense. Wait, so is that all for just part D?
Yeah, it's just this.
I'll just show that. Okay. What about C though?
Is that okay? I mean, can we move on?
Yeah, it's okay. We can move on.
Um, part D. Will tax burden fall entirely on buyers, entirely on sellers, more on buyers, more on sellers? So the way this graph is shown, it looks like it's going to fall more on the buyers because the rectangle is bigger on that side. But it really depends on the slope of the curves. So it actually the answer is it depends. It does seem to say. I mean, look, this is online here. I'll just snip this in, but you definitely want to rewrite this if you're going to include it.
Okay.
It really depends on how much falls on it really depends on how much falls on the buyer side or not. So the tax buyer will fall more on buyers because the demand is more inelastic than the supply curve, and I think that's what it said. Maybe I didn't. Maybe it didn't. Maybe that's in the.
The tax burden
Yeah.
will
So
fall entirely on buyers. I
More
don't
of it's
think he
gonna.
actually cares about explaining it, to be honest.
Okay.
Let's move on to 3.
Okay.
This is-
Number 3. Okay. So the number 3 says, okay, Carlos runs a small printing company, hires one worker of 12. Okay, pays on your rent. Spends. Okay. Wow. This looks like this seems like one that's online. Profit, accounting profit, economic profit. Boy. Okay. So I run a business and I don't think about any of this. This is not how you. It's not how you do it in real life. But okay, are the numbers 12,000, 5,000, 20,000, 40,000, 4,000, 15,000, 3? Okay, yeah. All right. So the accounting profit. This is for 4. The accounting profit AP is equal to 35,000. That's what they say. That's the final answer. Now, how did they get there? We don't want that. We want it's $72,000 in revenue minus $37,000 in costs. So how did the
okay.
costs come in? We probably should figure that out. 12,000 plus 5,000 plus 20,000. That's how the costs.
The 20 looks like a 10.
Sorry, yeah, 20. That's how you get there.
Oh, okay. That's even. So just calculate the profit and economic profit. Should he keep running his own business or work for the competitor?
Okay, now we got to do the economic profit.
Hmm.
So the economic profit, okay, this one's different. It's there's he how do I say this? Um, so there's it kind of accounts for the same stuff, but there's more. So he's that's these other numbers here. So he spends $4,000 that alternatively. Okay, so he's got this $4,000 plus he could work as a competitor. He could that's 15 the like the 4,000 he could get for investments. There's this 15,000 he could work over there, and he also could get $3,000 for other entrepreneurial talents. So the total of this is 22,000,
Hmm.
and that's deducted from the accounting profit. Basically, so the accounting profit was 35,000. I should have made that clear. The accounting profit is 35,000. The economic profit, it's the accounting profit minus these like additional things. So it's 35,000 minus 22,000.
Oh, all right. And then in the end, you just get something like $13,000.
Yes,
Oh,
exactly.
okay.
Yeah,
So this is just some simple math, basically.
yes, yep, not too
I would
bad.
actually take that. Thank you.
All right, we got
On
a
to number
couple
4, I
more.
guess. 4, 5, and 6, and we're done. I don't think 6 should be too bad.
All right. What is the profit maximizing quantity should the firm shut down? So this is one of those where it's like if and I don't know what it is. If AVC is less than ATC, do this, do that. I am not going to be much
Up on this?
help on this. I'm gonna have to lie. I'm gonna have to find some graphs that look like this one to be able to tell you. Because I don't know where to start on this. But let me do this. Let me just use the wonderful world of the internet and see if we can find this question, because we never know, we might find it. Nope. All right. Yeah, I'm not getting much help on that. We can come back to it though. Let's go to 5. Boo company currently produces Q. It sells perfectly competitive, buys resources. Margin of product labor is 50 units. Margin of product of capital is 80 units. Okay, is Boo operating in an economically efficient manner? Okay,
He says
if
he's
MRP,
operating in an efficient way because like ATC is less than the marginal, than the marginal revenue.
okay,
That's about the extent that I know.
I thought it was like M. It sells its goods. Okay, 50 units. If MP is less than MR.
Let's see if I can find this. If this gets too frustrating, we can always go on to another problem.
Say that again.
If it gets too frustrating, we can always go on to another problem.
Let me see if I can find it here. So if MRP is greater than MRC, if MRP is greater than MRC, then I don't know if it's efficient. That's the problem.
Rifling through my old screenshots, try to see anything.
It's not that complicated, but it is okay. So the ratio here, it's this 160 over 80 is 2, and this 100 over 50 is 2. Because those are equal, that is a profit maximizing condition. So that seems to be correct. So like I guess this is I think we can do it 100 over 50 equals 2, and let me do a lowercase, and 160 over 80 equals 2. This is the profit maximizing condition. Although, is it units over dollars? I guess they do units over dollars. Let me do it that way. 50 over 100 equals 0.5, and 80 over 160 equals 0.5. What would the market price of its goods have to be for the firm to maximize its total profit based on the data listed above? Seems like it seems like that.
Let's see if I can find anything in my notes about it.
least cost. All right, let me do another search here on this. Maybe this one will reveal something. Oh, wait, there it is, 50 per 100. Okay, here it is. So this one's easier. It's I did find it. So this is correct for the first part. We could say 0.5 units per $1. That will be perfect there. And then this is where I mean, there's not actually, it's not any different, but it's, I don't know how much of this you want to show, but it's saying like 50 units times P, 50 units times P equals 100, comma, 80 units times P equals 160. So in both cases, P equals $2. Now there's a bunch that goes into this that I'm going to snip in on my screen, but I don't know that you need to spend all that effort, because I mean, showing this wouldn't necessarily show that you mean you're just really good at finding stuff on the internet like I am. It's not really helpful, but it's
he doesn't need the explanation. That's all good.
Yeah. Okay. So that takes care of that.
On to number 6. All right, let's see. Based on the graph, the market will produce. Hold on, probably already did like socially efficient. Trying to find the notes on them. So MSP equals MSC.
So the marginal, the socially, I guess MSC is socially, socially efficient, socially.
I think so. It's the cost that society wants. That's what I know.
So this is like, but what's the question is like, where will it produce? Will it produce at A? I'm sorry, will it produce at like B right in the middle, or will it be at A? The market will, the socially efficient quantity is B, but the market, okay, so I'm gonna highlight what I think is correct. The market will produce the market will produce B units. I have this wrong. The market will produce B units because B is where the two curves intersect, MPC and the other one. But the socially efficient quantity is at A, but that's not where the market's gonna happen. That would be my best guess on that.
Market will produce B units. Socially optimal ones. Okay. Yeah, I think that's true.
So now the ones.
I think this is a negative externality problem right here.
So the cost is higher, meaning like someone's got to pay for it now because the extra cost has to come from somewhere.
So the solution per unit tax the amount of the externality, no deadweight loss here.
To me, it's like your consumers are gonna pay more, so they should get a subsidy. I guess.
Mhm.
That's because the consumer surplus is on that side. Let's see if I can find um, this. So the subsidy needs to be A, free market. Hmm. We just want the answer to this one. Just I don't. These are never as clear as I wish they were. Um, so I think I guess the consumers don't want to pay the extra cost. Okay, so to me they need a subsidy. I mean, like they have to get some money um, back. Like they wouldn't pay the extra. And the extra is the H minus G because G is the price that they were paying, and then H is the new price after at the socially efficient quantity.
Fair
So
enough.
the product price would go back to G, I guess, where it
G
was.
from not socially optimal. Yeah, I would definitely go back to that, to the middle one. You are correct. All right.
So I'm trying to
Let's
go
try to
back
see
and
if we
find.
can do number 4. That's interesting. I think total revenue is just 20 times 30. I could be wrong, but I think that's just 20 times 30, which is just $60.
Average total cost. Okay, so we actually have a graph here that's similar to one that I just found. Average total cost. I just don't know where the price times quantity is. Like I don't know where. I don't know if it's 14 times 25 total revenue. Mm,
I feel like I have this somewhere in my notes. I'm trying to look through it right now.
So like I kind of want to say it's where marginal revenue equals marginal cost.
Mhm.
But this is where I don't know. I wish I could just tell you explicitly. I mean, revenue isn't this complicated. You just add up all your receipts if you're in a business. That's your revenue. But that's not what they're. It's not what they want. Maximize profit when marginal revenue. So something like when one curve's below another, something happens, and then you like you might not shut down in the short term. Um,
think I have this answer here.
I am not sure how much help I'm going to be on this because I just don't know which curves to tell you. Like, oh, it's this one, or it's this window. I just don't know.
I think it's before game three, so I'll look in the classroom. I think that we did like a test similar to this together. I think it's one. I know. I think this has something to relate with like monopolies. Nothing being inefficient. Let me see if I can find it. Production cost, market failure.
It'd be nice if we knew like whether this was a perfectly competitive firm, something else. That way I could find some graphs for this.
It's just so vague. That's what I really don't like about it. I think I have this graph. I think it's where the total revenue is like where was it? One of the lines like meets ATC or something. Wait, no. Is it?
Okay, so AVC is below MC above AT, AVC.
I know that it's making a profit because if ATC is below the D equals MR line, then that means that they're making profit. So I think it has to be somewhere. I know that the firm shouldn't shut down because it's making a profit right now. So that'd be a no. It's an industry you want to enter and say sell the same product as firm X. What do you want to enter? Probably not. Well, wait, they are making profit though, so it would make sense to join. I think I have something way in the back of my.
Okay, so I think the profit maximizing quantity is where MR equals MC at
Yes.
25 units, okay? What is the total revenue? The total revenue is price times quantity, okay, which is 25 times 14. Okay, and we'll get that number, whatever, it's 350. Total cost. Total cost is marginal cost. So this is where I just don't. This is where I think maybe I'm a little off.
I think total cost is like the smallest one, like 8 times 20.
Yeah, so maybe total cost is your average variable cost times your quantity. All right, so that would be something like your average variable cost there. Well, we don't have it. At that, see that's one of the problems is like we don't have average variable cost at that 25 quantity. Marginal price equals marginal cost. So I don't know, like maybe 20 12 times 25. It doesn't seem right, but I mean, what is the profit? Profit is total revenue minus total cost. That's where, it's really important that we get the next one right. Profit equals total revenue minus total cost. So that's, 350 minus 300. It's positive. And then no, they wouldn't short down. If this industry, is this an industry you want to enter and sell the same products from X? Yes, because there's positive economic profit. So all these other answers, though, depend on what we just said. So you got to be really, like, you may want to really make sure you believe that the total cost is right, which I don't really believe for sure. But
What did you mean by give them a subsidy back in number 6?
well, that way, so let's say something costs you, Jack, $10, but then the socially responsible price is $12. Well, if you're going to pay $12, you better get $2 back somewhere, and that's what the subsidy is.
Oh, okay.
That's what it means. Like, if you're going to pay extra, you wanna know why you're paying extra.
I think that in class they said that when you're in a negative externality like that, that's where they start to impose a tax, I think, like on the sellers or something.
Right. So you'd rather, if you want to make $2 extra, you want the sellers to pay for it, because the buyers won't. So the only other option here is you tax the producers. I'll throw that in. There's another possibility, because that someone needs to pay the H minus G. Someone needs to pay the amount that's being extra.
Yes. Did we do 2A again for the gasoline market? I think we did 2A, right?
2A is in the up here, right there.
Alrighty, I'm gonna draw that real quick. Thank you very much for your help tonight. I really appreciate it.
Yeah, of course.
You've been very helpful. There we draw that base graph, and now I'm gonna draw the next one. This is what happens after the tax. It's in post QE here, D here. Yes. Wait, so for BI, which one is labeled PB? Oh wait, okay, so that one right there. So you got PE price. You got here. PB up here. QT. PB. PS right there. What's the line labeled again? Just plus tax.
Which one? So this is this is the tax area in here, this triangle,
Mhm.
or I'm sorry, this rectangle.
Do we have to do any more with grass, or was that just
That
the
was it.
one?
Yeah, that was it.
That was it.
You just have to label it.
But no, this is pretty much everything that I wanted to go over today. Thank you very much, Matthew. I appreciate your time
You're
as
welcome. I'll
always.
see you tomorrow. Have a great night, Jack.
You too. Bye
Bye
bye.
now.